Hi, my name is Robert Adams. Our law firm is Robert J. Adams and Associates. To let you know, we have offices in Chicago and Waukegan, Illinois. Our primary practice is helping individuals file Chapter 7 or Chapter 13 bankruptcy. This video and the accompanying article are about IRS liens when one files a bankruptcy. I have a separate video on whether IRS debts are dischargeable in Chapter 7 or Chapter 13. But this video concerns the debts that are in fact dischargeable, but where the IRS has filed a lien. The IRS frequently files liens where a taxpayer lives. It applies to all property owned by the taxpayer, personal property, and real estate. The tax lien is good for 10 years, and it's generally not renewed. Okay, let's take a couple of situations. A person files a Chapter 7. They don't own a house, but they have personal property. What do? Well, outside of bankruptcy, the IRS has an exemption on personal property of $6,250. Most likely your personal property is worth less, so you do nothing. The other thing is that the lien only applies where you lived at the time they filed the lien. So if you move, the lien may disappear. For instance, at the time of the filing of the IRS lien, you lived in Lake County, Illinois. Now you move, you live in either Cook County or maybe McHenry. The lien doesn't apply. So there's really nothing for you to do. A more serious problem is if you have a home. If you file a Chapter 7 and the IRS had filed a lien, the lien does not disappear, even though we're talking about taxes that are discharged. So what do? Well, you have a choice of really doing nothing or paying it. Some people do nothing because they've told me, we don't intend ever to move or refinance our house. We're current on our mortgage and we're satisfied with what our mortgage is. So they do nothing. Others, however, want to deal with the lien, so they file a Chapter 13. Again, we're talking about taxes that are dischargeable in a Chapter 7 or Chapter 13, or where there's a lien. So there's really three circumstances you have. One, where the balance of the first mortgage exceeds the market value of the home. The other is when you take the market value minus the mortgage balance, there's still something left over, but not the entire amount of the lien. And the third situation is where you have a good deal of equity. So let's do some examples, which may apply to you and may not. We're going to assume for this little exercise that the market value of the home is $200,000. And the amount of the IRS lien on dischargeable taxes is $30,000. Okay, the first example is the mortgage balance is— when you file a Chapter 13, The entire $30,000 is a general unsecured debt, and you pay a small dividend, maybe 10 cents on the dollar. Second example is the market value is $200,000. When you're able to subtract the mortgage balance and anything else we can use, is $190,000. Well, in Chapter 13, you have to pay $10,000 in full, and the remaining $20,000 you pay as a general unsecured debt and usually a small dividend. The third example is you have a lot of equity in your house. The market value is $200,000, but the mortgage balance $120,000. In that instance, if you want to deal with the lien, you're going to have to pay it in full. One other wrinkle about filing in Chapter 13 where there's an IRS lien. The lien applies to your personal property. It's usually well less than $1,000, but you have to pay the amount listed as the personal property. Then the other thing people ask me about, what about my homestead exemption? The homestead exemption cannot be used against an IRS lien. The IRS kind of takes care of itself in dealing with people. Hopefully that's been a little bit of help and you learned a little bit more. I hope it has. We appreciate you watching our video and thank you very much for watching it. When you have an IRS lien and you want to deal with it in a Chapter 7 or a Chapter 13, I think it's best that you call a lawyer who's experienced in this area. Hopefully you'll call us. I want to thank you very much for watching our video.